What is going on, ladies and gentlemen? Welcome back to another video. Hope you've all had a fantastic weekend. Fear is at all-time highs. We're about to get one of the largest 2-week consecutive sell-offs that the history of Bitcoin has ever seen. We're close to closing out these candles. The blood is on the streets and people are fearful.
No! God, please, no! No! No!
So today, I want to go back over the technical analysis of Bitcoin, dive in a little bit deeper to some of the theories that I've covered in my last video, so make sure to watch that. We're going to look at a couple of on-chain metrics and then discuss exactly what we could see develop over the coming week. What should we expect? Should we expect price to continue to sell off after such a strong weekly close we're likely to get very soon? Or are we expecting more consolidation within this range that we're forming on this daily chart? But let's hop straight on to the charts. Let's have a look at the overall market and see what has happened over the last 7 days or so. What is it looking likely that we're going to close out for negative for this 7-day period? Starting here with Bitcoin, we're seeing it's likely to fall off around 25% from the value which we saw 7 days ago. And we're now back at around a 628 billion market cap. The altcoins have pretty much, as we traditionally see, had about 150% of what we've seen, whatever happens to Bitcoin. So we're seeing numbers like 40%, 40%, 40%. XRP is down 50. It's pretty much between the 40 and 55% or 60% region. The only coins that have stayed unaffected is the stable coins. So Tether, US dollar T, US dollar C, the US dollar coin, and then the Binance US dollar as well, BUSB. So the only real coins that haven't been affected, as we'd expect, are going to be those stable coins. So let's go have a look at Bitcoin's technicals. The weekly chart, from what we can see, has had a pretty strong pullback. This is one of the largest 2-week consecutive fall-offs of around 50% wick to wick, not body to body close. We don't have the close yet, so we don't have that data. But the wick to wick, we had a 50% sell-off, which is one of the largest in the history of Bitcoin over a 2-week period, which is why we are seeing fear at all-time highs. If we quickly load up the crypto fear and greed index, we can see we're at extremely high levels. We're now at extreme fear at a number 14. So if you want to have a look at further into how they measure this, how it's measured, and exactly what the data sources is, make sure to go and check this resource out. But it gives us a general idea of where the market sentiment is right now. There's going to be a lot of new investors within this market who haven't really had an idea of what they're getting themselves into, because it pretty much wouldn't matter where you bought into this market over the last, until we reached April really, and we started consolidating from February to April. You pretty much couldn't lose in this market. So any new participants, all they're going to have seen is upside. All they're going to have woken up to every morning is profit. So this is giving them an introduction to what the crypto market can really be like. And this is why you need to be taking profits. You need to be diversified. You need to ensure that you're managing your risk and not becoming overexposed. Because it's not all rainbows and butterflies. This is what the crypto market can also produce: 50% drop-offs in 2 weeks. And if you got in from these highs, that's a pretty disgusting turnaround. So on this weekly chart, it appears that we're holding this weekly 50 ME. We're holding this previous order block on this weekly chart, which is a little bit clearer on the daily. And we're also bouncing off of 0.618 fib retracement. Hopping onto this daily, as we can see here is the wick off distribution pattern that ended up playing out. We're now pushing back down into these lows. One thing I do want to highlight with this wick off distribution, it doesn't mean that this is the end of the market, because when we start to have a look at that weekly chart, we don't know where the end is. We could be forming something around these levels on a weekly chart, in which case we would still have the up thrust to come, which is where that next strong move could come from. So just because we have that distribution, it doesn't mean that the bull run is over. It's not the end of the market. A good example of this is if we scroll back to earlier last year, if we scroll back to August 2020, before this bull run really started taking off. We had this first initial price action, the initial surges coming, nothing crazy, but a small indication that we're about to go on a bullish run. We got up into those 10,000 regions, and if you go down onto the 4 hour on this chart, we got a perfect wick-off distribution schematic. However, it shook out a load of buyers, probably made quite a few people sold their positions, and at this point we then started the rampage, which has now become the bull run, which we have since gone on a 550% rally since that wick-off distribution event happened. So it's important to understand that this is not the be-all, the end-all. We don't know that this is calling the end of the market, because there might be a larger pattern at play, in which case we could still see those massive up thrusts to the upside, which could be the next bull run, getting us to that 6-figure Bitcoin. So I just wanted to quickly touch on that. So where we are now, we're back retesting this order book that I explained before, where all the liquidity is going to be around and potentially just under. So a pattern that I shared was a wick-off accumulation phase, and this is pretty present in the 1 hour chart, and I drew this pattern in my last video, so make sure to go check that out. And we can see we're starting to form this. It's forming pretty nicely. If we then compare this against the wick-off accumulation schematic 1 or 2, at this point we don't know yet, but we can see the price action is pretty similar. We've had this original selling climax, followed by the automatic rally, followed by the secondary test. And now we're having that further push down for a secondary test in phase B, which is what's happened today. And it appears that we're finding a support, which is why I've drawn this level in here. And from here, I'm not saying that this is the only thing that can happen, not at all. I'm just highlighting a possible scenario. So don't think that this is the only option I think is playing out. I'm just giving you my perspective of the different things that I'm noticing and how the price action could potentially develop. We're seeing price pushing up from these levels. So over the next couple of days, if we can start to see some bullish moves, again, you have to think about what this sort of price action drives. As soon as we start to break to the upside, there's going to be a hell of a lot of people who are going to be drawing in this trend line here. As soon as we break this, people are going to be going long. It's going to trap some bulls in. We can see some of that bullish momentum before then price gets manipulated back down to those lows. So the sell orders that the institutions placed over here, they can get out at break even and start and continue to accumulate their buys. One of the things that I really wanted to note for people to keep their eyes on was to see what the institution and the whales are doing. So if we take a look at Bitcoin addresses, and this is something that again that I touched on in the last video, we can see the whales addresses have increased from that low. And it's not many, but we're talking about Bitcoin whales with 10,000 and above Bitcoin. It's gone from 85 to 90. So this gives you an indication that the whales, the market makers, are purchasing. As I touched on in the last video, it's not like you or I where we buy 1 Bitcoin, 2 Bitcoin, which doesn't move the market because of the total market cap. It makes no difference. It makes no actual difference to the market. These big whales where they're purchasing tens of Bitcoins, hundreds of Bitcoins, thousands of Bitcoins, they can't do it all at once because it will drive the market unfavorably. And as the market starts to drive up, as the liquidity gets there for them to be able to buy, because someone has to be selling to them in order to buy. As that happens, their average price won't be attractive to them. They will want to continue to manipulate this and consolidate the price of Bitcoin until they have accumulated everything that they want, and then they will look to drive the market forwards. So this is a good indication. This is exactly what we're seeing. We're in an accumulation phase where the institutions are stacking back up, essentially. If we have a look at the 1K balances, not too much of a difference either, but we sort of bottomed out at these lows and now it's on the increase again. So overall, it's aligned with the thesis of this accumulation stage. Even if that wick-off pattern doesn't play out, like I say, it potentially won't. It potentially won't even develop. It's very early stages, but it still gives us an indication. The more I watch this and the numbers of what the whales are doing, it gives me that confirmation of how the whales are investing. And wherever the whales are investing, that's exactly the route that we want to follow, because they are the people who drive the price. So if they're buying, we want to be buying. And the fact that fear is so high, again, is that further confirmation that the whales are going to want to be buying at this point, because we've already seen that significant drop and we've scared the shit out of enough people who are going to be looking to sell right now, which is, in my opinion, the worst thing that you could be doing. A further confirmation of potential bullish bias. Again, development is needed, patience is needed. I'm not looking for this V-shaped recovery a lot of people are talking about. It's a potential scenario, yes, but I think one of the least likely, because it gives no times for the institutions to accumulate everything that they want to accumulate. So they'll just continue to manipulate the market within a range, trap people on either side, and then drive it where they want after they've consolidated it for long enough to get positioned how they want. Another good indication that we can look at is the stablecoin supply ratio. So as this stablecoin supply ratio decreases, it gives us an indication that stablecoins have more buying power, which suggests, yes, the price of Bitcoin has been going down, but it also suggests that there's been a lot of stablecoins being moved to platform. What that means is the whales are loading up on stablecoins in order to be able to buy when they wish to purchase. So the more US dollar Tether and other stablecoins that are on platform is a bullish sign. It means people are getting ready and gearing to invest those stablecoins into Bitcoin or other holdings. So let's now talk about what could happen this week. I'm not expecting to see anything crazy. We're about to get a strong bearish weekly close by the looks of things, unless things drastically turn around in the next 2.5 hours, 3 hours. Looks like we're about to get a pretty bearish close with this bearish engulfing, which has had around a 25% sell-off. So what do I expect to happen over the coming week? Over the coming week, I don't personally expect to see anything crazy happen. I don't expect to see huge amounts of bounces, huge V-shaped recovery like a lot of people are calling for. What I'm really expecting is further consolidation. I expect for price to most likely stay within this range on the daily chart of between 43,000 and all the way down to that low of 29.3, 29.5. I expect for price to continue to consolidate. If my thesis is correct, that this is where whales are accumulating their next holdings for the bull run, and I'm going to be keeping my eyes on those address balances, see if they continue to go up, keep my eye on the stablecoin supply, seeing if that more stablecoins are being moved onto platforms ready for the buy-ins. And then at some point, what I would expect before seeing any really strong bullish momentum is for price to drop down underneath this low. If we think about exactly what is underneath this low, in what situation do we not think that market makers and whales will manipulate price to grab all of this liquidity before the next move up? So what the deceleration will be is the whales accumulating. Then the manipulation will happen. Imagine how many stop losses are underneath this recent low. Imagine how many people were in longs from these leverage longs, probably got very close to liquidation, and now going to trail their stop up underneath this low as they see this as a strong level of support. Imagine how many people bought in at these levels. They had buy orders ready to go. They saw what was coming. They knew that it was going to drop or expected it to drop, so they had their orders ready. The market makers are going to want to manipulate it to also hit their stops. That's what all this liquidity is. What else could they be wanting to do? They could be wanting to trap short sellers into the market. How could they do that? They could push price underneath this recent price action, convince a lot of people, especially because fear is so high, that we're about to see a larger correction. We're about to see a drop down to these 24,000 levels, to these 19,000 levels. So if they push price underneath these levels, you're going to get a lot of short sellers coming into the market, trying to short the market. So not only are they going to grab the liquidity, which is going to be from these long positions, opened up here, opened up previously, they're also going to trap sellers into the market, again, gathering more liquidity that they can then manipulate price up. And then at this point, they'll want to drive it forward because they will have already accumulated everything that they have. So that was a bit of an update on exactly where I'm seeing Bitcoin right now, some technical analysis, some on-chain metrics, a little bit of an update further into depth of what my thoughts are in terms of what's coming up this week. As always, this is just a scenario. I'm not saying that this is 100% playing out. These markets, they develop very quick. We have to keep our eye on them as they develop in order to continue to grow our bias and our thesis. This is the most likely scenario that I see that is currently developing right now by what I see on the technical analysis, by what I see on the charts, by what I see on the on-chain metrics. Doesn't mean that I'm right. It's just important to understand these scenarios so that if it does play out, I know exactly how I'm going to take advantage of it. So I hope you all enjoyed this video. If you have any further comments, make sure to put them in below. If you want more updates or you want me to look into any cryptos as well, let me know in the comment section. But for now, smash that subscribe button, hit the like button for the YouTube algorithm, and I will check in with you all soon. Have a great week. Take care. Bye-bye.